Hey everyone, and welcome back. We're diving deep into Bank of America today, or BAC for those in the know. Is it a good fit for your portfolio? We'll find out. Articles, data, even Wikipedia.
Yeah, it's going to be interesting because we're talking about a massive player in the financial world. We're talking about the second largest banking institution in the U.S. by market cap, only behind J.P. Morgan Chase.
Huge EE. And speaking of huge EE, their market cap has surged almost 35% just this year alone. That's some serious growth.
Yeah.
Hard to ignore, but what's driving it?
Well, I think you need to look at the bigger picture. There's a trend of consolidation in the financial industry, and Bank of America has been very active in acquisitions, especially during times of, market upheaval.
You're talking about back in 2008 when they acquired Countrywide Financial and Merrill Lynch.
Yeah.
That was during a pretty turbulent time.
Exactly. Those acquisitions were all about capturing a big chunk of the market share in mortgages and investment banking, but they also came with a lot of risk.
And it wasn't just financial risks, right? There were a lot of legal battles and controversies surrounding those acquisitions.
Oh, absolutely. If you look at their Wikipedia entry, it's basically a case study in the complexities of mergers and acquisitions during a financial crisis. Government bailouts, massive fines, a whole lot of scrutiny.
So fast forward to today. Have those acquisitions ultimately paid off for Bank of America?
That's the million-dollar question for investors. On one hand, they've achieved undeniable market dominance. But on the other hand, there are some lingering concerns about their long-term growth strategy.
I see what you mean. They've got the size, they've got the market presence, but are they investing enough in innovation to stay competitive in this, rapidly changing world of finance?
That's a crucial point. While they have made some acquisitions, their recent activity seems to focus more on traditional banking rather than, disruptive technologies like fintech.
It's almost like they're trying to solidify their position in the existing market instead of,
Yeah.
really forging a path into the future.
And that's a key question for you as an investor. Are you looking for a company that's playing it safe, or are you seeking out investments in companies that are really pushing boundaries and disrupting the industry?
Food for thought.
Yeah.
But, serving 10% of all American bank deposits is nothing to sneeze at. That's a huge GE customer base.
Oh, absolutely. Their consumer banking division is definitely a core strength.
Yeah.
And it's deeply intertwined with the U.S. economy. Their performance is often seen as, a bellwether for the overall financial health of the nation.
Okay, so we've got this giant in the banking world with a history of bold moves.
Yeah.
Some successful, some not. So what does all of this mean for the everyday investor who's maybe considering adding BAC to their portfolio?
Well, on the plus side, they offer a strong dividend policy, which is very attractive to income-focused investors. And their size and stability mean they're likely to weather economic storms better than some of the smaller players.
Those are definitely some big pros.
Yeah.
But what about the cons?
Well, one concern is their potential exposure to economic downturns. If the U.S. economy takes a hit, Bank of America will probably feel the pain. And then there's the question of their valuation. Some analysts argue that their stock price may already reflect their current potential, leaving less room for significant growth.
So there's a balance to consider. Potential for steady income through dividends, but maybe not as much room for explosive growth in the stock price itself.
Exactly. And we can't forget about the elephant in the room, ESG factors. How does Bank of America measure up when it comes to environmental, social, and governance issues?
Ah, yes, the feel-good factor. It's becoming increasingly important for investors who want to align their portfolios with their values.
Absolutely. And Bank of America has a bit of a mixed record here. They've made some progress in areas like green initiatives and community development, but they've also faced criticism for their financing of fossil fuel projects and their involvement in certain controversial industries.
So a mixed bag as we've seen in other areas. It's clear the Bank of America is trying to navigate this complex landscape, but they're not without their challenges.
And that's the reality for a lot of large corporations today. They're operating in a world with a lot more scrutiny and evolving expectations around ESG performance.
Okay, so we've covered a lot of ground here. Financial performance, innovation, valuation, ESG factors. I'm starting to get a clearer picture of Bank of America as investment.
And remember, this deep dive is all about giving you the knowledge you need to make an informed decision for yourself. There's no right or wrong answer here. It all comes down to your individual investment goals, your risk tolerance, and your personal values.
Absolutely. We've laid out the facts, we've analyzed the trends, we've explored the different perspectives. Now it's your turn to decide if Bank of America deserves a spot in your portfolio.
And before you make that final call, we need to talk about one more crucial aspect, one that often gets overlooked in these discussions. Their dividend policy and the potential for share buybacks. These are key factors that can really impact shareholder value.
Oh, yeah. Let's not forget about those dividends. I know they have a history of paying solid dividends, which can be a big draw for investors looking for, a steady stream of income.
Exactly. And they've been steadily increasing those dividend payouts in recent years, which, signals confidence in their future earnings potential. Of course, the sustainability of those dividends depends on their continued profitability.
Right. No guarantees in the world of investing, but their track record definitely suggests they're committed to rewarding their shareholders.
Right. And remember that potential for share buybacks. That's another way they can return value to shareholders. When a company buys back its own shares, it reduces the number of outstanding shares, which can increase the value of the remaining shares.
Okay, so we've got dividends, A&D, share buybacks adding to the mix. This is getting interesting. It seems like Bank of America has a few different levers they can pull to enhance shareholder value.
Absolutely. And their history suggests they're not afraid to use those levers. We're talking about a company that has made some bold moves in the past, both through acquisitions and through their capital allocation strategies.
It's true. They've definitely got a history of shaking things up. But I'm curious, how has their approach to shareholder value evolved over time? Especially in the wake of those 2008 acquisitions and the subsequent financial crisis. Have they become more conservative, or are they still willing to take calculated risks to boost returns?
Well, that's a question that requires us to dig a little deeper into their history and their corporate culture. Let's take a quick trip back in time to understand the forces that have shaped Bank of America into the company it is today.
Sounds like a plan. Let's rewind the clock and see what we can learn from their past. All right, so we're time traveling back to understand Bank of America and how they think about dividends and share buybacks today.
Well, you can't talk about Bank of America's history without talking about, those big acquisitions in 2008, Countrywide Financial and Merrill Lynch.
Yeah, those were huge. They totally changed the game for the financial industry.
For sure. Those acquisitions were all about growth and, becoming the biggest player, but they also came with a lot of risk, as we've talked about.
And those risks became a reality, didn't they? They ended up with a lot of financial and legal problems.
Yeah, they did. They had pressure from regulators, investors, the public. It was a make or break moment for Bank of America.
So how did they handle all of that? Did they become more cautious, or did they just keep going with their growth plans?
It's funny because they actually took a middle-of-the-road approach. They admitted their mistakes and worked to fix the legal problems. They also restructured their business to focus on their main strengths.
So they changed course a little bit, but they didn't completely abandon their growth goals.
Exactly. And that brings us to where they are now with shareholder value. They're definitely committed to giving money back to investors through dividends and share buybacks, but they're also trying to stay financially strong.
So it's like they're trying to find a balance between rewarding shareholders now and investing for growth and stability in the future.
Right. They're not just throwing money around. They're making strategic decisions based on lots of things, like their earnings, capital requirements, the overall economy.
That's got to be reassuring for investors. It means they're not just reacting to the market, but thinking carefully and making measured decisions.
Yeah, and here's something we haven't really talked about. Bank of America has been putting a lot of money into technology and digital stuff lately.
So they're not ignoring innovation completely.
Not at all. They know they need to adapt to the changing world of finance, and they're investing to stay ahead.
That's good to hear. So we've got this company with a long history, with some bold moves and some times of pulling back. They've had their challenges, but they've also bounced back and shown they can adapt.
And that ability to adapt will be super important as they navigate the future of finance. It's full of uncertainty and opportunities.
All right, so back to our big question. Is Bank of America right for your portfolio? We've talked about their financial performance, their market position, innovation, valuation dividends, share buybacks, history, ESG factors. It's been quite the deep dive.
It really has. And as we've seen, there's no easy answer. It depends on your personal investment goals, your risk tolerance, and your values.
For sure, if you want a company that has a history of paying good dividends and bouncing back from tough times, Bank of America could be a good option. But if you're looking for a high-growth, tech-focused company, it might not be the best fit.
And remember to think about your values, too. If ESG is important to you, do your own research on how Bank of America is doing in those areas.
Totally agree. At the end of the day, the decision is yours. But hopefully this deep dive has given you the info you need to make a smart choice.
And remember, investing is a marathon, not a sprint. It's about learning, adapting, and making decisions that match your long-term goals.
Well said. So there you have it, folks. Our deep dive into Bank of America. Hopefully you found it helpful and learned something. And as always, we want to hear from you.
Don't forget to subscribe to our YouTube channel and leave a comment telling us what other stocks or topics you want to see us cover.
Until next time, happy investing.
Okay, so we're about to rewind and look at Bank of America's history.
Right, and we need to think about those big acquisitions again. Countrywide and Merrill Lynch in 2008. Yeah, they really shook things up for the whole financial industry.
They sure did. Those acquisitions were all about growth and, being a market leader. But we've talked about the risks that came with them.
And those risks definitely came back to bite them.
Right.
They led to some serious financial and legal problems.
Yeah, big time. They were under pressure from everyone, regulators, investors, the public. It was a really critical moment for them.
So how did they get through it all? Did they play it safer after that, or did they just keep going for growth?
Well, it's interesting. They kind of took a middle path. They owned up to their mistakes and dealt with the legal stuff, and they also reorganized to focus on what they were good at.
So they changed things up, but didn't totally give up on growing.
Exactly. And that leads to how they approach shareholder value today. They're definitely focused on giving back to investors with dividends and buybacks. But they also want to keep their finances strong.
So they're finding that sweet spot between rewarding shareholders now and investing for the future.
Right. They're not just spending money without thinking. They're making decisions based on a lot of factors, like how much they're earning, what their capital requirements are, and the overall economy.
That makes sense for investors. It shows they're not just reacting to the market, but making smart and careful decisions.
Absolutely. And one thing we haven't really touched on is that Bank of America has actually been investing a lot in technology and digital stuff lately.
Oh, so they're not ignoring innovation altogether.
Nope. They realize that the world of finance is changing, and they're putting money into staying competitive.
That's good to know. So we've got this company with a pretty interesting history, some big moves and some times of taking a step back. They've definitely had tough times, but they've also shown they can adapt.
Yeah, and being able to adapt is going to be so important for them in the future. The world of finance is unpredictable, but there are also a lot of opportunities.
So let's come back to that big question we started with. Is Bank of America a good fit for your portfolio? We've really looked at everything: their finances, their market position, innovation, valuation, dividends, share buybacks, history, ESG factors. What a deep dive.
I know, right? And as we've seen, there's no right or wrong answer here. It all depends on what you want to achieve as an investor, your risk tolerance, and what you believe in.
Exactly. If you like companies that have a good track record of paying dividends and bouncing back from challenges, Bank of America might be a good option for you. But if you want something that's really high growth and focused on tech, maybe not so much.
And remember to think about your values, too. If ESG is a big deal for you, do your own research and see how Bank of America measures up.
Definitely. So there you have it, folks. Our deep dive into Bank of America. We hope it's been helpful and interesting. As always, we want to hear your thoughts.
Make sure to subscribe to our YouTube channel and leave a comment. Tell us what other stocks or topics you want us to cover.
Until next time, happy investing.